If you've been following housing headlines lately, you've probably noticed the signals seem a little mixed. Some stories point to economic uncertainty, while others suggest conditions may be improving. So what do the numbers really tell us? That's what I want to share with you today. We're going to look at the national picture first and then focus on what's happening right here in our area, because what's going on locally can look very different from the national story. One thing that's been affecting some of the early data this year is winter weather. In parts of the country, snow and ice slowed down home tours and delayed closings, which caused January's numbers to come in softer than expected. Here in the Joplin area, our winter was not out of the ordinary, so we didn't see the same level of disruption. The market here kept moving at a steady pace. As we move into spring, one of the most consistent patterns in real estate starts to play out. March through May is traditionally when more homeowners decide to list, and that seasonal shift shows up year after year. More listings mean more options for buyers. Longer days and better weather also makes it easier to get out and tour homes, which tends to increase showing activity as the season gets underway. That increase in activity is one reason homes often sell more quickly in the spring. As more buyers enter the market and begin touring homes, well-priced properties in good condition tend to move faster. It's one of the more predictable rhythms in real estate and something we see play out in many markets as the spring season unfolds. But seasonal patterns are only part of the story. The broader economy also plays an important role in shaping the housing market. One of the biggest economic factors affecting housing is inflation. This chart shows inflation gradually cooling compared to a couple of years ago. It hasn't moved in a perfectly straight line, but the overall direction has been downward, and that matters for housing because inflation is one of the key factors that influence mortgage rates. Rates have come down from their peak. At their highest point, 30-year rates were around 7%. Since then, they've trended lower and have been sitting in the 6% range. Even a shift of half a percentage point can make a noticeable difference in monthly payments. So when rates move, buyer activity often moves with them. Mortgage rates are one of the biggest financial factors affecting the housing market, but they're not the only one. The job market also plays an important role, and right now, unemployment has remained relatively steady, holding in the mid-4% range. That matters for housing more than people sometimes realize. When people feel confident about their employment, they're more comfortable making long-term financial commitments, and buying a house is one of the biggest ones. But the broader economic picture is only part of the story. It's also helpful to look at what's happening inside the transaction process itself. Here's something worth paying attention to. Nationwide, about 13.7% of homes that went under contract in January fell out of contract before closing. During the highly competitive market a few years ago, buyers had very little negotiating room and deals rarely fell apart. As the market has become more balanced, it's more common to see contracts unwind during the inspections or financing reviews. In many ways, that's a sign of a more normalized market, not necessarily a cause for alarm. Cancellation rates vary quite a bit across the country. Some markets are seeing higher rates than others, and those variations are completely normal. Local supply, pricing, and buyer demand all shape how a market behaves, which is a good reminder that national headlines only tell part of the story. Speaking of which, let's talk about what's happening here in our area, because that's really what matters most for the decisions you're weighing. Starting with Joplin, homes are currently selling at about 98% of list price, which tells us sellers are still receiving very close to their asking price overall. Inventory is a little over 2.5 months, which keeps supply relatively tight. Homes are averaging about a month on the market, which points to a steady pace of activity to start the year. Webb City currently has the lowest inventory level of the communities we're looking at just under 2 months supply. Homes there are selling at about 99% of list price and averaging around 17 days on the market, which is the fastest pace among these markets. Taken together, those numbers suggest demand is still moving quickly relative to the number of homes available. Neosho is showing a slightly different pattern. Homes there are averaging about 58 days on the market, which is noticeably longer than in other nearby communities. At the same time, homes are still selling very close to list price and inventory remains under 3 months. So while the pace of sales is currently slower there, the pricing data suggests buyers are still willing to move forward when the right home comes along. Junction currently has about 3¼ months of inventory, which is a little higher than some of the surrounding markets. Homes are still selling very close to list price at about 99%, but they are averaging about 50 days on the market. Junction also shows the highest median sold price among the communities we're looking at today. In Carthage, homes are selling about 98% of list price and averaging around 3 weeks on the market. Inventory is just over 3 months, which places the market closer to a balanced range compared with some of the other areas. One thing that stands out when you look across all 5 of these communities is how close homes are still selling to their asking price. Every one of these markets is currently seeing homes sell between roughly 97 and 99% of list price. That tells us that while the pace of the market may vary from city to city, sellers are generally receiving very close to their asking price when homes are priced appropriately. So stepping back and looking at the full picture, the market is moving at a steady pace to start the year. Mortgage rates, unemployment, and inventory are all continuing to shape how buyers and sellers make decisions. What the data points to is a market gradually finding its balance, and that's a healthy place to be. If buying or selling is something you're weighing right now, these trends are worth factoring into your timing and your strategy. I'm Michelle Clemons with Charles Burt Realtors, and remember, when you're ready to move, move with Michelle.